Hey guys, welcome to another Trade Genius podcast. Bob and Phil here, as always. One of our most favorite combo indicators for a recession has just lit up. We're going to talk about what that is exactly, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob. So we're getting into the second half of the year. You and I both agree we have a pretty bearish lookout on how that's going to eventually play out. But on top of that, we've got our couple of things that we think are really good tells in terms of, a downturn in the economy. What say you?
Yeah, I agree. And then before we show these charts here, a couple things happened today too. They're going to do a rebalancing of the NASDAQ on the 24th of July because the top 7 stocks are 50% of the weighting of the NASDAQ, and they're going to rebalance those guys down. And so you're going to see downward pressure on basically the magma stocks, or the old FANG stocks that people remember those by, because now Facebook is now Meta. And the second thing too is that we're down Wednesday, Thursday, Friday, and we're recording before the market closed, but the market's pretty much flat. The Qs are down for the day. So those happy days we're here again that we've had in May and June, we're starting to see that skew flip, Phil. And the reason why I think it's flipping is because the stuff we're going to show you right now. And do you have the credit card delinquency chart up yet?
I do, yes.
Yeah, take a look at this, guys. We're at 2008 levels, okay? People are broke. And you know what's interesting about 2023 versus 2008 is the attitude of the borrowers, okay? I think people now are at the point now where they're like, hey, the government generates funny money. Why should I pay my loans, i.e. my student loans? Why should I pay my credit card debt? You guys just bail out the banks anyway, so let me walk away. And I think this is starting to accelerate, Phil. What do you think about that?
Yeah, I do think there's a lot of complacency. There's this entitlement, I think, when it comes to like debt and walking away from debt. You even saw that back in '08 to an extent when people were underwater on their homes and basically would just walk away from their home. And yeah, there we get a credit, hit on their credit rating, right? But, that's a limited thing because 7 years, I think it is. And then that gets kind of erased. So, and people were okay with that because they didn't want to slug through years and years of being underwater on a property that they spent way too much money on. So we kind of do have a culture, and I think it's worse now, of people willing to basically walk away from bad debt. The problem with that here, though, Bob, is that I think we're going to turn into another '08 type thing with these banks, because not only do we have I think the bigger problem this time around is the commercial real estate portfolio. Those things are in huge trouble. It's essentially what the consumer was going through in '08 with buying homes that devalued quickly. Well, now that's hitting the commercial real estate sector. And there's a lot of banks that are in big trouble here. And I think you're going to see further consolidation of that. So I don't think we're in a good spot here. I think there's a lot of problems under the hood and a lot of mines. I think we're in a big minefield here with the market.
Yeah, and don't forget autos. Same thing with autos too. Yeah. So, and huge news today, there was a lender, a REIT giving back 24 properties to the bank in New York. These are hotel properties.
Yep.
So, and then which ties into our next thing here, because all I keep hearing is that, airports are with the highest capacity ever, Airbnb's at the highs, blah, 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 blah. But Disney's kind of a tell for me, because Disney's like going, this is like the secular Mecca visit that people make, right? You have kids, you're going to, you're going to Disney.
Right.
And you're going to pay the money changers when you go to Disney, and it's a fortune, And so all of a sudden, man, from actually February on, people have put on the brakes, Phil. And I know you and your family enjoy Disney now and again. And so, my family's past the Disney stage, and so it's. I like the thing that you said in the room today. It's no longer an enjoyable experience. It's a very expensive cattle ranch.
It is, back in the day, you had a lot of perks. For example, you could say, we go there for the anniversary with the kids, right? So knock out a couple of things at once, anniversary and a fun thing for the kids. And they would take care of you if it was your anniversary. There's all these little perks, free desserts, they'd write happy anniversary on your dessert, blah, 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 blah. Like that's like last time we went, none of that stuff was happening. And over time too, like I can speak for like Disney Vacation Club, a lot of those perks that you had are being removed. So it's getting to the point where it's like, yeah, they're trying to eke out every last bit of profit they can for shareholders. It used to be that, there was some upside to having things like a vacation club membership. Well, now I hate to say it, but I don't really see the upside. There's going to be a market for it. There's many people that haven't done the Disney thing that have, a new generation of couples with kids. And I'm sure that, there'll be some uptake in that. But I think for those of us that were there for a while, and this sentiment is not uncommon. A lot of the people that have been there for a decade or whatever just don't enjoy it as much as they used to back in the day. So I think you're getting a large segment of people, an entire cycle of people, or generation, if you will, because there's been generations of families that go and do that thing down in Florida for vacation, family vacation, that are over it and they're looking for other venues now. So I think it's a bigger problem than Disney would like to admit. And I've never seen Disney be so aggressive in their cost-cutting measures as we've seen in the last 2 years. What that tells me is that they've got really smart people in the room that look at all the data, and I don't think they see a very favorable future over the next couple of years. And that's why I think we're seeing such aggressive measures that we've never seen before since the modern era of Disney.
Yeah, and and I live in California, and my daughter her and her friends used to get an annual pass. Thankfully they paid for them, but they doubled them one year because they didn't like locals, right? Because locals don't buy all the crap,
Right.
And but this year I've never seen. I mean, the radio today, they're giving away free Disney tickets. The radio blasting out, come to the park, get a combo pass, get this, get that, because they don't want locals there. They want mom and pop to come in there and buy those 100% markup, 200% markup Disney paraphernalia,
Yes.
They don't want a kid to be cruising in, hop on a couple rides, grab a soda and leave,
Right.
And that's what they're ending up with, because they wouldn't be advertising locals if they had a full summer slate on. Usually they do this stuff in the fall and the winter when there's not the same amount of tourists, but summertime in California, this is high season for us, SoCal, and it's just they're advertising like crazy. So something's up. And the way I look at it is, I think is some of it Disney kind of shot themselves in the foot. But number two is that people, they go back and they look at the thing. You have 2 kids in Disney and you do a 5-day Disney deal. You're talking $5,000, $6,000, $7,000 vacation. Okay.
Oh, wow. Uh-huh.
And if your family makes $100,000 a year, remember $100,000 a year used to be money, right?
Right.
That like wipes you out, because, you got car payments have gone up. You got auto insurance has gone through the roof. Home insurance gone through the roof. Taxes are going through the roof. Healthcare, there's nothing left. And so mom and dad are saying, we're going camping this year. We're not going to this,
Yeah. I mean, that's literally a thing. I mean, going back to this credit card delinquency chart, I mean, it's no secret that most people are putting the multi-day Disney trip, especially if you're going to go down to do the trip down to Florida for Walt Disney World, a chunk of that's going on the card, right? Because like you said, you can easily... Look, if you're going to take a family, like you said, 2 kids, 2 adults to Disney World, and to really enjoy it, you have to be down there for, I would say a week at least, if you're going to really enjoy it, because that's a big place. It's like its own county. You're easily talking like a $10,000 trip, right? So that's not, I don't think most people going to Disney, I don't think that's discretionary income or expenditure for them. So, it's, again, we're piling up. So you're seeing a slowdown in the consumer visiting there. You're seeing a buildup in the credit card delinquency rate that's rivaling recessionary periods. Again, another data point that's in recession territory. So I think you're seeing all the signs there. Market sometimes takes a little while to react to what's happening and rolling over. You've also seen a sharp bounce in the yield curve, bounce last week as the 10-year moved. So I think you're starting to see what we would perceive as the next 100 weeks of pain, only because of what the yield curve is doing. The 2s and a 10 yield curve being inverted as it is, that usually means you got about 100 weeks of just before you really look for a new bull market. And I think that we're seeing just the rollover period now for that.
Yep, I totally agree. You know, guys, this is just getting started. I mean, this is happening while people are fully employed. Just wait till some of these layoffs start really ticking in.
Yeah, and it's a weird job market in that regard too, because you do have some areas that are laying off, tech's laying off, but then other segments, because of just a lack of bodies, it's still looking for a job market. So, again, we came out of a very bizarre thing with $2 trillion being printed in short order and people staying home. And I think, we're seeing the after effects of something that we've never gone through ever in our economy. And so it's going to be weird. And I think you just have weird metrics and people are trying to find a fit for all this stuff. I don't think we have a fit, other than looking at things like the bond market. If there's anything you look at, you just look at the bond market. The bond market's the smartest trade in the room. And they're telling us that you're going to bounce from a deep inversion, and that always tells you that the recession is coming. So I think you have to kind of just look at all the elephants in the room, and it's hard. It would be very difficult to escape a recession at this point.
Yep, you got to plan for it.
Yep. All right, guys. Well, that's going to do it for today's episode. Thanks for watching. Let us know your thoughts on the recession. Do you think we're crazy, or do you think it's coming? Let us know your thoughts below. We'll see you on the next video. Please hit like and subscribe and smash that notification bell and set it to all if you can. That really helps us out. Also, check out our stuff at tradegenius.co. I'd love to see you in the rooms. Take care.
Trade Genius.